Have you seen the markets lately? At 14.95, Meta's price-earnings ratio is meager and 41% below its 5-year average. Will you consider Meta cheap? Find out in today's video. Meta Stock Analysis Review: Cheap or Scam in Disguise? Meta Platforms, previously Facebook, recently released the financial results for the second quarter of 2022. The business posted disappointing results and undershot analyst revenue and earnings projections. The following day, Meta stock price was down about 7% in pre-market trading, adding to the previous 54% decline in share price since September 2021. Revenue marked the company's first top-line decline since the company went public in 2012. The price is close to its epidemic lows at around $149 per share. This is a classic case of Mr. Market overreacting, but that is to be expected given the significant strategic transition the company is undertaking as its ad business struggles. It substantially invests in the metaverse. Meta Stock Analysis. Since its 26% decline on February 3rd following the release of its Q4 earnings, the Meta stock has made 4 attempts to climb higher to reach its 50-day line. The first 4 were inadequate, and the 5th is now in use. On Monday, Facebook's stock rose 0.2% to 180.89. For Meta stock, the downward trend of lower highs and lower lows has not yet been broken. This bearish trend had continued since September 1st, when Meta reached its record high of $384.33, and the movement would cease at an increase higher than $183.85. Meta stock went over its 50-day line on September 20th, signaling a sell signal. Although Facebook's stock rose 0.2% to $180.89, we shall look at a 1% decrease from the $29 billion in a few seconds. Facebook's stock dropped 5.2% after its earnings on Thursday, July 28, but has rebounded. The relative strength line, which compares a stock's performance to the S500, hit a 7-year low at the end of July. If you don't want to have trouble locating us the next time, please subscribe to this channel. Otherwise, you'll have a very tough time finding us. This channel is not a resource for expert-provided financial advice, investment, or financial planning tool. Before choosing any trades, do your research. In the second quarter of 2022, Meta recorded sales of $28.82 billion, a 1% decrease from the $29 billion achieved in the second quarter of 2021. A 0.5 percentage point decline from the same quarter of last year's gross profit resulted in a gross profit of $23.6 billion. Operating income suffered the most, falling from $12.4 billion in Q2 2021 to $8.4 billion in Q2 2022, a staggering 34% drop. This was caused by a rise in operational expenditures and expenses, which rose by 22% annually to $20.5 billion. Due to the rising costs, the company's previously unassailable operating margin of 43% was reduced to 29%. Additionally, earnings per share fell to $2.46, a 32% decrease from the prior year. Despite falling from $12.4 billion in Q2 2021 to $8.4 billion in Q2 of 2022, a staggering 34% drop, there is a positive sign of 15% year-over-year growth, which we will discuss shortly. The good news is there has been a rise in app users, with Family Daily Active People (DAP) rising by 4% annually to 2.88 billion. This was slightly higher than the 2.87 billion recorded in the previous quarter. Facebook's monthly active users (MAUs), which were 2.94 billion, also 1% greater than last quarter. A lot of grannies are now on Facebook. Positive signs included a 15% growth in ad impressions across the apps. However, the average cost per advertisement dropped by 14% year-over-year due to expenditure cuts by ad purchasers. With $8.5 billion earned in the quarter, rising 8.9% year-over-year, free cash flow also remained relatively robust. Stock market doesn't only instruct you to make money, but it also teaches a lot about life, patience, persistence, and wisdom. Raj Misra. Nothing shown in this video should be interpreted as professional financial advice. Before investing, do your research. The business upped its R&D spending to $1.9 billion, up 35% from the previous year. Precedence Research predicts that the global metaverse market will expand at an explosive 50.7% compound annual growth rate, CAGR, between 2022 and 2030, $1.6 trillion. This indicates that Meta has a lot of room to expand significantly. Meta is a value stock. With a $486 billion valuation, Meta isn't exactly cheap. However, Meta has turned into a value stock due to the stock falling even more than earnings up to this time. Compared to the typical S&P 500 company, it has a price-earnings ratio of 15, which is lower. The price-earnings ratio for Meta is at 14.95, which is incredibly low and 41% below its historical 5-year average. Its price-to-free cash flow ratio is 7.97, which is 49% less expensive than the average for the previous 5 years. Additionally, Meta is reducing billions of dollars in spending to support profitability while revenue stagnates. If Meta can overcome the present obstacles and start to profit from its metaverse investments, then there are a lot of potential upsides. Our content is only informational. Never mistake our information or materials for legal, tax, or financial investment advice. Always conduct your research before making any investments. With the business upping its R&D spending to $1.9 billion, up 35% from the previous year, you are contemplating whether it's a buy. This channel has got you covered. Watch our video on Is Meta Stock a Buy? Why Facebook Meta stock is falling.